Yeah, so it got kind of scary for a second, but that fear switch just got flipped off. So after Friday's chaotic close, markets came surging back today. They came roaring with the Nasdaq climbing 2.2%. The S&P 500 gained 1.6%. The Dow, it added 1.3%. So today what we've seen is investors hitting buy on pretty much everything tech after President Trump and his team over the weekend calmed fears of this full-blown trade war that could possibly happen with China. So Trump took to Truth Social and pretty much said, hey, everything y'all are worrying about China, don't worry, it'll be fine. And then JD Vance, vice president, came out and pretty much echoed that the U.S. is willing to negotiate with China. Then on the Air Force One, Trump said that his threat of 100% tariffs on China is still planned, but November 1st is an eternity away. So that single phrase, let's see what happens, was all Wall Street needed to really exhale and take a breather like, all right, he might taco out again. So that came out and everybody's seen a lot of optimism regarding that. And then Treasury Secretary Scott Bessent joined that reassurance tour, telling Fox Business he's optimistic about de-escalation, and added that if China won't talk, the U.S. still has substantial levers that they can pull that are equivalent or even more aggressive than Beijing's rare earth export restrictions. So for now, the market's takeaway is that the U.S.-China tensions, they're probably not going to ease, at least anytime soon, but it's also not completely exploding and it looking really bad out there right now. But between the government and the shutdown and renewed trade drama, traders are bracing for more volatility spikes ahead. And it makes sense. We've been here before a few other times. But there's this new focus this week, and it's that earnings season is officially starting. So that's a big one because Wall Street's heavyweights, and it's mainly these big banks, JP Morgan, Wells Fargo, Citigroup, Goldman Sachs, they all will kick things off tomorrow. So tomorrow's Tuesday, followed by Bank of America and Morgan Stanley on Wednesday. And these reports matter more than usual because the government's still dark, so we're not getting any fresh data from them. No official jobless claims, no CPI yet. So corporate earnings are the only pulse check we have right now regarding data. So more people will have their eyes focused. All right, we're not getting this data, so let's focus in on this data just to make sure fundamentally everything's holding up. What are these banks saying about how the economy and the consumers portrayed right now? But according to FactSet, analysts actually raised their profit forecasts mid-quarter, something we haven't seen since back in late 2021. And if that trend continues this earnings season, it could really be the confidence boost that we need right now to keep rallying higher and higher and higher. Because we've seen, if we go back to stocks real quick, if you look at that top right chart, the QQQ, this tracks the Nasdaq 100. What we've seen is it reached its all-time high around this 613.18 cents mark right there, and then it fell all the way to 582 on Friday, and we're just kind of trying to trend back there where we've really been stuck to this imaginary 600 line. That's where we just keep on bouncing off of and coming back and forth. But 602.50 is where we sit right now. And the market wants clearance as to, or at least a confirmation as to, all right, it's time to sell stocks and sit aside for a while, or hey, new all-time highs. So that's what the market's looking for, and that's why they're watching these earnings so closely, just to look for some type of hints as to what the heck is going on. But meanwhile, monetary policy made headlines today as well. So we heard from Anna Paulson, the new president of the Philadelphia Fed, and in her first major speech since taking the job, she called for 2 more cuts by the year end, so right on track with the Fed's dot plot, arguing that tariff-driven price hikes will be temporary and shouldn't stop the Fed from easing any further. Paulson said that her base case is that tariffs will increase the price level, but they won't leave a lasting imprint on inflation. So in other words, the Fed should look through the noise and focus on the labor market, which, according to her, is losing momentum. The unemployment rate ticked up to 4.3%, and nearly all new jobs this year have come from healthcare and social services, and everything else is flat or falling. So it's not looking really good when you look at the larger picture and how it's being propped up by mainly two industries. She mentioned that businesses are lowering starting wages, and the opposite of what we've seen during the pandemic hiring boom. And that's why she believes inflation from tariffs won't last, and why gradual cuts are still the right move going forward. So her outlook is also warned that this economy strength rests on a narrow foundation, a small number of industries, high income consumers, and the market's obsession with AI, artificial intelligence. And AI enthusiasm, she said, has lifted stocks and household wealth, but if that happens to cool, if that hype cools down, one of the last major pillars of growth could vanish completely away. That's helping things keep going higher, this AI narrative that we have right now. And that makes the next few months especially delicate. Markets are optimistic, but the underlying economy is still fragile. So for now, the markets are calm. China talks are back on the table, and we kind of got a taco or a burrito, whatever you prefer. I like burritos more. But the Fed's leaning dovish again, and between the shutdown and earnings and tariff deadlines, this month will be a wild one, and I doubt it'll be absent volatility. So I'll be here tomorrow. This was a later video. I was going to not drop a video today, but man, I just could not do it. I missed y'all. So I'll be back tomorrow on time. So y'all be there, be square. We'll keep watching every move, how that shapes everything out, the next Fed decision, and the market's directional wave. So anyways, I hope your day is awesome. I hope you have a good night, and have a good one. I'll see you tomorrow.